Perfect. Okay, and I'm actually able to record. It'll record in two different things, but it'll be recorded.
Okay, thanks.
So I guess you could put pre-break and post-break. That would be the easy way to put it. Okay, so we're going to put the ending balance and the ending date of our bank statement. So this actually is coming from the financial institution. We're putting it into our QuickBooks file. Then we're going to hit the option to start reconciling. At the top of our screen, what we're going to see a handful of pop-ups appear. It's the reconciliation screen that always has the most for whatever reason. So the first thing we'll see is the statement ending balance. This is the balance that we just typed in. Then you have your cleared balance. Your cleared balance is the beginning balance. It was $5,000 when we were on the last screen. That it should match the beginning balance of your bank statement, minus any checks or payments that you have checked off below, and plus any deposits you have checked off below. That gives you your cleared balance, and your statement ending balance minus your cleared balance is your difference. We want this difference to be 0. And we get it to 0 by taking our bank statement, and this is kind of more of the older way of doing it, but just to give you an idea of how it actually works. You would look at your bank statement and say, okay, I have $300 that came out of my bank on August 19th. Is that recorded in QuickBooks? Yes, check it off. $175 deposit, August 27th. Did that happen? Yes, check it off. $250 on my bank in QuickBooks, and so on. You would go down the list and check off all of the transactions as you see them on your bank statement. QuickBooks, though, has made this process a little bit easier and more efficient. So I just scrolled all the way down to the bottom of my transaction list, and I see 3 transactions here that we had added. So you notice these little green squares. These little green squares represent a feed from your bank account, from that bank feed center where we entered the transactions from initially, that bank connection. Because it came from that bank connection, QuickBooks says, hey, I pulled this information directly from your bank. You added it to your file. It definitely cleared your bank account, or assumed cleared your bank account is probably the better way to say that. So it automatically marks off these transactions for me. Okay. So in a perfect world, if you are bringing all of the data over or into your file only by using this the banking feed and not manually recording any transactions, when you come into your reconciliation screen, this should be very easy. It should be, you come in typing what your ending balance is, and then everything should be checked off and match your bank statement. That's the ideal world. Okay. I'm going to select off all of these transactions by clicking this little bubble at the top of the selection list. And I'm going to say, yes, select all. I want everything to be checked off. And this is what my reconciliation screen should look like. It should give me my statement ending balance, and my cleared balance should match, bringing my difference to 0. See, this is all of the changes in the account. $5,000 beginning balance, however much money was spent, payments made, plus any deposits gives me my cleared balance, which matches my bank statement. If there's any difference, if let's say I missed checking off a transaction, or QuickBooks missed it, or I unchecked it by accident, it's easy to kind of scroll through the list and see what isn't there. Another common reason why there might be a difference is if you're in your bank transactions and you didn't clear everything from a particular period. So like here we have transactions dated in November 2020, and ideally they would have cleared our bank statement. I mean, we're working with made up kind of numbers and transactions here, but you would be able to identify here, hey, these are from November, those are in my reconciliation period. I have to add those before I continue with my reconciliation. That makes sense, everybody? I have to open up the chat window again, too. Let's see. There we go. Oh, it's everyone just telling me that I didn't share my screen. All right. Let's go back here. Okay. So we're going to select off everything. Our difference is 0. So our books match our bank and everything is good. We select finish now. And we'll get a little, you've reconciled this account. We can view a reconciliation report if we'd like, or just select the option to be done. Let's select View Reconciliation Report just so you can see what that looks like. Okay, and our reconciliation report is going to mimic the bank in many ways. At the top, you're going to see a summary of what happened this period. It gives you the date you reconciled on and the ending date of the bank up here at the top. You'd see your beginning balance, the money spent and received, to give you what your statement ending balance is. And then just scrolling down, you'll see all of the transactions that you had marked off for that period. And then any transactions after December 31st that are still waiting to be cleared in the future. So you want to do reconciliations monthly. You know, we're in December now, tax season in 2021 is coming up. You want to take your books, make sure January, February, March, April, and so on are all reconciled in your QuickBooks file. That helps to ensure that everything, all deposits, all money received, all money spent has been recorded on your books. At a minimum, that's a real important thing for getting your tax return started. One piece of information that your tax accountant should ask you for is your bank statement as of December 31st, as of the end of the year, and your balance sheet as of the end of the year. And what they're going to do is confirm that your statement ending balance matches what it says on your balance sheet. That helps to ensure, they'll probably should ask for last year's, the end of last year's and the end of this year's, just to make sure that they match. And then that assumes that everything that happened in the interim would be recorded. All those ups and downs brought us to that same, that ending balance at the end of the year. Just to show you where you would see that. If we click on reports, we'll talk about reports for just a minute, and then we'll talk about bills. Okay, if we talk about reports, I keep mentioning the balance sheet. The balance sheet is your accountant's favorite report. That would be here. This is going to show you the balance of each of your accounts as of any of a specific date. So our bank accounts, we see that 171, that was the balance that we reconciled to. Then you have your savings, all of your assets, then all of your liabilities and equity. So this is your financial standing at any given time. Okay. Then your favorite report, typically, is going to be your profit and loss. So if we open up our profit and loss over a given date range, so January through December, typically a year is how we look at our P&L, but we can change the dates up here at the top. We can use this drop down to, select this month, this week, this quarter, last month, that last year, and so on, all these different intervals of time, all dates being the greatest number, and then you can narrow it down to 1 day is the smallest interval you can have here. And then down here below, you'll see all of the detail of each of these accounts, what your total income is. Let's go down just a little bit. Total income. Like this is an example of how sub accounts would look on your profit and loss. So you have labor as the header category. So I see a sum of $300, but expanding out the detail, that $300 is made up of $250 from installation and $50 from maintenance and repair. Keep scrolling down just a little bit. We have retail sales. This is the deposit that we recorded from Square customer. And then if we keep going down a little bit more, we also have bank charges. That's the $30 that we recorded from Square customer. If you click on any of those totals, any of the numbers here, you're going to see the transaction details. So what makes up this $30? If I click on that again, you'll get a transaction detail report. And if I click into this again, I'll see that original deposit that I had created. Okay. Does anybody have any questions on that before I move on to creating a bill? Okay. So now we're going to go into the accrual side of accounting. So what we've talked about so far is cash basis accounting. cash has been actually received and cash has been paid, right? Accrual basis accounting is you have incurred an expense that you have not paid for yet, or you have earned income that you haven't received yet. So what that kind of correlates to in transactions is vendors, you have a bill that you received that you haven't paid, and on customers, you have invoices outstanding that they haven't paid. So let's go to, we're going to go to expenses. I'm just going to show you quickly the vendor list and how we get there. So clicking on the expense tab and then the option for vendors brings us to our vendor list. Here we have this little colorful bar at the top, which shows if I have any open purchase orders and the total amount, bills that I have outstanding and that are overdue, and what I've paid in the last 30 days. If I scroll down just a little bit, I'll have my whole list of vendors, everybody who I've set up in the company file. If I select A1 rental up here at the top, I'll also see the transactions that relate to them. I can easily change the account it's posted to within this screen here using this drop down. And if I need to modify any information, if I want to add more details, if they're a W-9 contractor or 1099 contractor, I can select edit here, and then my vendor details, my vendor profile will appear, and I can modify this however I need. Okay, so from here, I can either create a new transaction directly from this company's or this vendor's profile, or I can select new on the left side. I typically like the new button than anywhere else, so I'm going to go with new and then go to vendors and then select the option to record a bill. Okay. So bills are only available in Essentials and Plus. And the reason for that is many, you don't have to record a bill for every transaction that comes out of your bank account. So like, for example, things like that you have on auto payment. So things like maybe rent, telephone expense, possibly utilities, those kinds of things you don't need to record a bill for because they're going to be on automatic, automatic payment. They're going to come through your bank feed and you're going to see them there. You're not waiting 30, 60, 90 days to pay it. You would record a bill when you are, not paying it right away, or it's not on auto payment or anything like that. You're going to pay it in 30, 60, 90 days. If you need to track your vendor bills, how much you have outstanding at any given moment. It's great for cash flow purposes to know when you're receiving bills from vendors and when they're due and when you have to pay them. That's a good use to record all of your bills, but you don't necessarily have to. Okay. Can we talk about accruals and gap accounting? So QuickBooks is built for small business, which does not have to follow gap. Gap is only required when you are a public company. So it follows like other comprehensive bases of accounting. So the basics of accounts receivable, accounts payable, fixed assets, bank accounts, all that kind of stuff is maintained in QuickBooks. But things like gap for depreciation, gap for prepaid expenses, accrued expenses, that kind of stuff is not really, it's not a function of QuickBooks. It can be done, but it's not a function of the system. So for example, prepaid expense, you would record when you've made the purchase, have that on your balance sheet, and then you would have to record a journal entry to allocate it each month. QuickBooks is not going to automatically do any of that for you. And especially with Simple Start doesn't even allow you to record bills. So that's just not gap compliant from the start. Tax basis accounting, cash basis accounting, those are not gap. Those are other comprehensive bases of accounting. Okay, so back to the bill. So I'm just going to be consistent here, and I'm going to use Con Ed as my bill here just to show you how to set it up. And it's very similar to how we record a check. There's one major difference though. We're not selecting where this money is coming from. Actually, I guess there's two. We're not selecting where this money is coming from because the payment hasn't been made yet. There's no cash that's been moved from our bank account. And on our checks, we are able to select a payee. We had the ability to select a customer, a vendor, or an employee. Any one of those names could receive a check. However, a bill is only received from vendors. We can only use a vendor name when we record a bill. So we'll go with Con Ed is our vendor name here. Terms, QuickBooks gives us generic terms here. So let's just go with net 30. You can also add new if you'd like, but we're just going to go with the QuickBooks given one because they're common. You have your bill date. I'll leave it as today. And based on my terms, it calculates my due date automatically. The bill number is going to be the invoice number given to me from my vendor. So just make one up. Again, you have the tag option, which again is a new feature in QuickBooks. And then you have the category. So what am I receiving this bill for? That whole principle of who and why is really kind of the basis of everything that's going on here. When you really take your accounting system and kind of take a step back and just think about it as recording transactions, record keeping, it makes it a lot less of a daunting task. Nobody likes to talk about accounting and finance. It's not a fun topic for anybody except people like me. You know, it's just, you really think about it as categorizing who was paid or who paid you and categorizing why. Okay, so the category here, I'm going to go with utilities again. I can include a description if I'd like. I don't have to. And then I'm going to put a dollar amount. So let's say it was $500. Okay. And then I'm going to select save. QuickBooks has also recently released a bill payment software. So everywhere you enter a bill, it's going to give you the option save and schedule payments to sign up for their payment processor. So just so you are aware of that. Okay, I'm going to hit save. Actually, I'm going to use the drop down and hit save and close. Okay. So now from here, if I wanted to see all of my outstanding bills, I want to track how much I owe to my vendors. We have all of our reports here. We have all these different groupings. We're going to scroll down. Who owes you, sales and customers, what you owe. So there's a handful of bills here, or a handful of reports here on your vendor bills. So you have things related to contractors, and then you have your accounts payable reports, and then unpaid bills. A lot of people tend to use the unpaid bills report. That just gives you a list of all of your accounts payable transactions that are outstanding and have not been applied. I personally like the accounts payable aging summary. So if I click that, unpaid bills just gives me the list of open bills. The AP aging gives me my vendors and then broken down into current due, 1 to 30, 30 to 60, 60 and 90, and so on. Similar to the profit and loss, I am able to click into any of these totals and see what makes up that dollar amount. So here I go into my bill, gives me the number I just put in there, the vendor, when it's due, and how much is due, how much the bill is for versus what the open balance is. Okay. So if I wanted to pay this bill, if I open it, I have a couple of options. I can select into the bill and record payment, mark it as paid. Or I can select new in my left side menu, under vendors, go to pay bills. Here, I'll leave this on. We haven't done anything with the credit card today. So the first thing we're going to do is select the payment account. Where am I paying this vendor from? I'll pay it from my MasterCard. I'll put in a payment date. So we'll leave it as today. And then we have Con Ed. So let's just pay that bill. It sorts it here based on due date. So these ones with the little red exclamation points are outstanding. But we'll ignore those for the time being. And we'll just go to Con Ed. And what happens here is when we click off that bill that we want to pay, our payment amount is automatically going to default to what's in our open balance. You can modify this if you'd like. If let's say I don't want to pay the full 500 right now and I want to pay 250, I can change, I can override what it defaults. It just defaults to what the open balance is, trying to, again, it tries to help you in many instances. Sometimes it's great and sometimes it's not successful. So let's say I'm paying 250, that's going to be my initial payment on it, and I'll pay the 250 at a later date. And then I'm going to select save and close. Okay. On my report here, because I did not close out of it, I still stayed within this report screen. You now see the bill. All that information has stayed the same up until my open balance. My open balance has now dropped to 250. It was originally 500, so I still owe 250 on this balance. If I click onto this bill, in the upper right corner, right corner, you'll see the balance due, and then you'll see the payment that has been made. If you click on this hyperlink here where it says one payment made, click on that, and then click on this next hyperlink, it's going to actually bring you into the bill payment screen. So if let's say you need to modify something, if you actually wrote this from your checking account, not your MasterCard, you can change that here. That's up to you. Those things are not set in stone. Okay. Okay. Does anybody have any questions on bills, bill payments, the reporting for bills, things like that? Recorded credit card payment should be recorded as. When you record a credit card payment, should it be recorded and categorized as credit card payment? So if you're recording a payment from your checking account against a, let's say a checking account to your Amex, you would record it as new, and then it's pay down credit card is the transaction type you would use. And then the next one is, can you make bills billable to a client? Yes, you can. So if I'm in this bill here, and we'll actually do that because we're going to go into invoicing now. If we're in here, I'm going to select billable here, and then I'm going to make it billable to Amy's Bird Sanctuary. So I incurred this utility charge due to Amy's Bird Sanctuary. Okay, and I'll show you how that affects our invoice. Okay, so now we're going to go onto the reason we're in business, invoicing our customers and actually receiving money and making sales. So along this left side menu, again, we're going to look at the sales side here. I'm going to go to sales, and I'm just going to click on sales. It'll open up the full customer center, sales center, I guess would be really called. The first screen is just going to be your overview. It gives you some kind of graphical representations of your business, of your invoicing and sales, some shortcuts. Then you have your all sales transactions. So similar to where we saw all expenses, bills, bill payments, stuff like that. All sales is going to show me all my invoices, payments, billable expense charges, sales receipts, sales orders, refunds, charges, and so on. And then you have invoices up here at the top. Invoices is just going to give me the list of open invoices. If you are sending invoices out of QuickBooks, it's very nice because it also gives you a status. So we have our invoices here. We have the total, the customer, the amount, and the status of this. So you see, scroll down here. Does it give us any detail? It tracks all of the deposits, what's been paid, when things are due, if they're currently due, if they're past due, stuff like that. On each one of your invoices too, if you are sending them out through QuickBooks, there is a tracker. So if you email your invoice to a customer, QuickBooks will know when that invoice was open. If you're using Intuit Payments, you'll know when a payment has been initiated, and you'll know when it hits your bank. So that's a benefit of using Intuit Payments. This is also tries to push you there with the payment links. This links to Intuit Payments, okay, where you would send it to your customers, and then they could just easily pay you via credit card. And then here you have your customer list. So similar to the vendor list, you have all the customers listed. I'll open up Bessie's books because that's the one we created together. And then we can select edit over to the upper right corner, and then we can go and modify any customer information that we need. Okay. And then lastly, you have products and services, but I'm really going to talk about this a little bit more when we're looking at your invoice, but this is where you would find the list of products and services that you sell. Okay. So to create a new invoice, we're going to select new in the upper right corner, upper left corner, and under customer, select the option for invoice. So this is going to be the screen where you're going to populate all of your information. But before we start populating things, I want to show you how to customize this invoice for it actually to go out to your customers. So to customize this invoice using this little black bar at the bottom of your screen, you're going to select the option to customize. Then we can select the option to edit current or create a new style, but I tend to always select edit current because it'll be the default. And we have 3 different sections that we cover here. We have the design, the content, and the emails. So the design here, we have the option to change up the template. So it gives us like 6 different options here. We can add our logo. If you have the logo added on that first screen, it would carry over here. You can change the colors, make it green. You can change your font. I think there's like 4 different options of your font. And that would be how your invoice would go out to your customer. You also have the option to change the content that they see. So clicking on the next tab here, content is broken down into 3 sections: the header, the activity, and the footer. The header is going to be the information related to your business and their business. So your contact information, email, address, things like that. And then the customer's contact information. Okay. Then you'll also see the option to add the form name if you wanted to show invoice or not, as well as the invoice number. And then you can also include additional custom fields. The custom fields here is crew number. This is a landscaping company, which is why that is turned on. Next is the activity. So if I want them to see if there's a service date associated with the work that we had done together, I'm going to uncheck that one. If there's activity, the product or service that we are selling to them, the description of that product or service, the quantity, hours or actual count of product or service that we're selling times the rate gives us our amount. You can change the 2 questions. You change the language on an invoice in the customer profile. You don't change it on the actual invoice template here. And then you can get to editing the invoice by in the invoice screen. There's a black bar at the bottom that says customize. Select the option to edit current, and that's how we got here. Okay, so here you have the different activity information you can include, and you have additional options here below if you want things grouped, collapsed, and so on. And then you have the footer down here at the bottom. The footer just gives you what the total of your invoice is. If you want to include a message to your customer, any other text you want to include, you can put that there as well. And lastly, our last tab up at the top is our emails. And our emails here, this is the generic email that's going to go out. But before you send out any invoice from your QuickBooks file, it's going to give you a preview of that email. So if, let's say, you wanted to include, you know, your invoice is attached and everything like that, it's December. If you wanted to include a happy holidays, you can do that on the fly. You don't have to come back and modify your invoice template, because your invoice template, every other time it goes out, is going to say something similar to your invoice is attached, please remit payment, and so on. If you want to send the invoices from QuickBooks. Then the invoice will also come in as a PDF attachment to the invoice. To the email. It's going to show you what the balance due is, the ability to print or save it, and then scrolling down, it'll also give you, the other day it gave me the detail of this, the detail of what's on the invoice. Okay, so I'm going to select done down here at the bottom. Okay, and we're going to go back into our new invoice window.
Do the client have the capabilities to pay for the invoice?
If you have Intuit Payments turned on, yes.
Okay.
If you're using Intuit Payments, you can email the invoice directly to the customer from the system, and it'll include a payment link on that email for them to initiate that payment.
Okay, thank you.
Okay, So in our invoice, because I made that one utility charge billable to Amy's Bird Sanctuary, we're going to create the customer we're going to select is Amy's Bird Sanctuary. As soon as I select her name, the customer email appears, the billing address, the terms that I have set for Amy are going to appear here. Then along the side, I have billable expenses to this customer. I have billable time. We didn't talk about payroll. That's another piece of this, but we did talk about the expense. We did bill an expense to her. So that billable expense from that bill is going to appear directly to the right, and I'm going to select add. So that's going to be added to my invoice. I'll put a description here. Okay. Then what makes this a little an invoice a little different than every other transaction in QuickBooks. Every transaction in QuickBooks that we have used thus far has used account or category. The invoice uses products and service. So that's a little different. The reason why it is different is because when we send out our invoices to customers, we don't want them to see how we posted on our financials. We don't want them to buy a table and then see sale of product income on their invoice. That's not how they would see it. They would see it as table, and we would link that table to the income account it belongs to. So that's what we're going to do now. So under where it says product and service on line 2, because line 1's taken up with that billable expense, I'm going to create services just because it's a lot easier. We talked about inventory a little bit earlier and how inventory can be, it's a lot, it could be a lot to track. It can be very easy to track too, but 9 times out of 10, there's always a thing with inventory. That's the best way I can put it. So product or service, I'm going to put consulting services. Okay. So we're going to add consulting services. Anytime there's something new to a list, it's always going to appear just like this. We're going to add consulting services here. And we talked about the difference between inventory and non-inventory. And quickly to go over them again, is inventory or products that you buy and sell that you want to keep a track of. You want to know how many tables you have on hand at any given time. Non-inventory would be things that you're buying or selling that you do not want to keep a track of, or that you don't have to keep a track of. Then services. Services are pretty self-explanatory. Consulting services, design services, legal fee services, IT services, the list goes on. And then a bundle. A bundle is a collection or some kind of grouping of any of these item types. We're going to select service here. And the name of our item is going to be consulting services. SKUs are typically used for items, actual inventory. You can include a picture here if you want. Again, that's another feature I've never seen anybody use in QuickBooks, but it is there. Category here is everywhere else in QuickBooks thus far has used category interchangeably with account. Here it is not. Here we can actually group our items in our inventory into different categories. But we're just going to skip over that now because it's not required. So we have consulting services. And then if you want a description to always appear on your form, so we can do something similar to the email where it's like consulting services regarding, and you leave that blank. So every time you use it, you don't always have to type out consulting services. You can modify it from then on. If you have set rates or set prices, you can put the set rate. So let's say it's $100 per hour. And the income account this is going to go to is going to be services. Same thing, same idea with the example of a table going to sale of product income, right? How we want that to appear on our financials. Typically, sales tax is not charged on services in New York State. I'm going to leave it as turned on here just to show you how sales tax works on the on your invoices. So again, we're going to play a little bit of pretend, but it's for a purpose. Then you have purchasing information. If you purchase this product or service from a vendor, you can select this box off too. This is definitely very important if you are using inventory to track what is on hand. You buy it from somebody, so you need to put purchasing information. But we're just sticking with the consulting services here, so we're going to just leave it just as is. So I'm going to hit save and close. Okay. And then let's say you have the utilities there, and let's say I spent 5 hours on this account. $500 would be what my services are, consulting services regarding training. If I wanted to include more detail, whatever. Keep scrolling down just a little bit. We have our sales tax. So if you are collecting sales tax, now sales tax is probably one of the most complicated taxes that there are out there. And the reason for that is it's determined by how you purchase your product from your vendor, how you sell it to a customer, the state that you're in, the county that you're in, the locality that you're in sometimes. It's very complicated. So I would get in touch with your accountant, your tax accountant, or if you need assistance, Presty and Nagley, the tax staff, would definitely be able to help you out with that. It's just I don't want to put you guys down the wrong path on that. But just so in terms of setting it up, if you do charge sales tax, if you know your product does need to be taxed when it goes out to customers, sales tax on consulting services. Yeah, it's just an example we're using on it because services in general are not really taxed in New York. You don't really charge sales tax. I think design services are possibly the only ones that you do. But I don't know the specific rules on it. I just know that there's a lot of gray in it. Sales tax is not a very it's just complicated. It's the best way that I can say it. Okay, so with our sales tax rate here, in order to set up a sales tax rate, Intuit is based out of California and has another office in Tucson, so it gives us those 2 tax rates. But if I wanted to create New York State's tax rate or New York City's tax rate, I could select the option to add new here. I would record it as a single tax rate. Tax name would be NYC, and the agency name is going to be New York State Department of Tax and Finance. And that's 8.875%. And that's the only information that you need at this point for setting up sales tax. Other than the knowledge that your product is taxable or not. So here we have taxable subtotal of $500. So it's going to automatically calculate my sales tax on this taxable subtotal and give me that total. If I wanted to include a discount, I could. And then we have the total of our invoice, $1,044.38, the sum of these 2 charges to our customer and the tax rate. Does anybody have any questions on that before I move ahead to payments? Okay. So I'm going to hit save and close on this invoice. And I'm going to go back to my reports. So one report that Intuit marks off as a favorite report for you right off the bat is the accounts receivable aging summary. It's the same thing as the payable aging summary, just now this is money that people owe you. The accounts payable aging summary was the money you owe out to your vendors. So if QuickBooks wants to work with me at all today, it will load. Okay, there we go. So we have our accounts receivable aging summary. And again, this is broken down into 30, 60, 90-day buckets. And we can click on any one of the totals here to see what makes up the balance. So Amy owes us $1,200. So if I click on that total here, I can see the invoice that we just created for her, as well as a previous outstanding balance. The old invoice was for $459, and she has an open balance of $239 still on that invoice. Okay, to pay this invoice, what I'm going to do is on the left side menu under New, select the option for Customers and Receive Payment. Here, I have to say what customer I'm receiving this money from. So I'm receiving it from Amy. And let's say that she paid us $1,044.38. We populate the date. Sorry, I skipped this part. We put the customer name in. We put the date that she paid us. We can include a payment method and a reference number. So if she paid us check and the reference number would probably make the most sense, and check number. But you can also include if she paid you on MasterCard, Visa, Amex. Let's say she paid us MasterCard. Then it's going to deposit to an account called undeposited funds. Undeposited funds, think of it as kind of like a lockbox, right? It's you received payments from your customers, but you don't necessarily deposit them individually. You might receive 10 payments from customers on the same day. Let's say you receive 10 checks. You don't make an individual deposit for each one of those 10 checks. You're going to go to the deposit and you're going to go to the bank and make one deposit. And that's it. That's combined of those 10 checks received from customers. But we need those payments to be recorded to clear out our individual customer balances. So that's where we have the received payment going to undeposited funds. Okay. So I put in the amount that I received, what she paid me, and then I applied it against the invoice balance, right? And we can, here it's typically QuickBooks will apply this. If let's say this was, if I put it in as 37. If this doesn't have an exact match, it's going to apply it from the oldest invoice to the newest, right? It applies it, based on how far outstanding it is, what the oldest invoice is. You can apply it that way, but let's say she's disputing this charge for whatever reason and then still wants to move forward with our business and, pay the next invoice. She's going to pay this total of $1,044, and then, we'll deal with this $239 at a later date. Okay, so we hit save and close. Can you show how to change the rates for a specific client? I don't necessarily know what that question is asking. Change the rates as far as change the rate on the invoice. You can go into an invoice, and even though I set it as $100 of consulting services, I can change this rate on the fly. However I set it up as my default, it doesn't mean that it has to stay that way. In QuickBooks Desktop, they have what's called price levels for customers. That's not in QuickBooks Online yet. So I don't know if you know that that existed in QuickBooks Desktop with changing the rates for specific clients, but QuickBooks Online doesn't have that functionality yet. And then wouldn't the payment come in through the feeds and we match it with the invoice? So yes. So payments, if you receive one payment per invoice, right? You receive, one deposit equals one payment. You can definitely match up the invoice that way. However, if your deposit is comprised of multiple payments, then you would want to record each one of the individual payments and then one deposit. So that's where this comes in under new and under the other column for bank deposit. So earlier I had told you to ignore these options, these payments to include in the deposit. The reason I said that is because this relates to our customer payments. This is where if we have multiple payments equaling one deposit, we're going to see all the payments we receive from our customers. That's what's closed out those balances. That's what's, the invoice totals now are properly cleared out. And we're going to record one deposit for the total of all three of these payments. So I can select all three right off the top. And that could be our one deposit. So if this was all checks, that's great. That $3106.90 is exactly what's going to hit our bank account. I'm going to throw you off for a loop again and talk about the bank charges when it comes to credit card processing. And here, if let's say there is a 3% charge on this, we would then also go bank charges. And then because there's a 3% fee, QuickBooks doesn't automatically calculate it, but you can do math in the cells. So if I type that in, 3106 times 0.3%, it's going to automatically calculate for me. And then I'll just put a little minus here. So all of our invoice balances are properly cleared out. That's the total amount I received against my accounts receivable, but this is the net amount I received in my bank account. So what you're saying is there isn't a way to change your rate for specific clients? No. The only way to change your rate for specific clients is if you had specific categories set up for them or products and services set up for them. I don't know how many you have. That would be different, but that is one option. If you want to set up multiple, like let's say it's consulting services and consulting services at $100 an hour, consulting services at $125 an hour, consulting services at $175 an hour. You can have all of those set up. So then that way, when you go to create your customer or create that invoice for the customer, you have multiple service rates to use for them. Okay. Does anybody have any other questions when it comes to the invoicing, receiving of deposit, anything like that? Okay. Perfect. Let's see. One last thing I will touch on is just your taxes and how that, well, let's see, does it do this? Because your sales tax lives in this tax center over here on the side and would actually track what your, this helps you to prepare your sales tax filing on a monthly basis, quarterly, annual, however often it is. And group out your gross sales, your taxable sales, your tax amount, and what your balance due is. So you can see a sales tax liability report, which will help you to populate your filings at the end of each month, or the 20th of the following month, whatever the silly New York thing is. So here you can see the sales tax liability report, what's been collected at the New York City rate, New York State rate, sorry, New York City, that's what NYC stands for, the rate there, and then the Arizona one, if you had California, and however many multiple sales tax things that you have, would all be listed here. Let me think. I think we really kind of covered it. So one thing that, a little bit of journal entry. So how do you schedule estimated taxes? You don't schedule in QuickBooks. Those would be if you worked with your accountant and they prepared tax estimates, you would just write that check or pay that on the tax websites to submit those estimated taxes, but that's not generated from your QuickBooks file. It can be generated based on your profit and loss that you record to know how much your estimated taxes are going to be. If you sit with your accountant to figure that out, you can use your reporting to find that. And then journal entry. So journal entries can be recorded if you go to new in the upper left corner here and under other, journal entry. Now it's important to note here, everything that's in QuickBooks is built for small business owners and bookkeepers. It is not built for accountants. So even though it's an accounting platform, every transaction that you have seen so far has had a journal entry behind it. This is if you actually need to make a journal entry to record either a non-cash transaction, if you're allocating things out different ways, that's what you would use journal entries for. So here you have your journal date, a journal number. QuickBooks automatically assigns that and gives it reference numbers for you. I typically like to put a little bit of detail in. So let's say it was depreciation or something like that. I could put that in the journal number name. And then I can select my accounts. Every journal entry has to have at least 2 accounts. That's not going to give me that option, is it? Okay. And to save the journal entry, your debits have to equal your credits. They must match. Otherwise, QuickBooks will not let you save this transaction. So you click on that new option under the other column, select journal entry, and then you can add as many lines here as you'd like. If you wanted to record personal expenses coming through the bank or that you made on your personal card that are business transactions, what I would suggest is list out, how can you see the transactions journal? I'll get to that question in just a second. If you wanted to break out all the expenses you've made as a business owner on your personal card, so let's say I have office expenses and advertising and travel and so on. And let's say that's 150 and this is 150. I would list out all of my individual categories of expenses I'd cover. And then this would be owner's contribution would really be what this totals. You would have, everything would break out and then have one lump sum total as a credit. Okay. And then can you see journal entries that QuickBooks automatically assigns? Yes. You can do that. Okay. By going QBO test 5. So on every transaction, I was not able to cancel the wrong bank account in the chart of accounts, the bank, which I don't use it anymore. How can I do it? Is it Susan who just wrote that message in the chat? Is that does the account have a $0 balance in it in QuickBooks? You can only delete a bank account if it has a $0 balance. Okay, so on the transaction, if you want to see the journal entry that's behind it, at the bottom of the screen, you have this little black bar where it says more. You can see transaction journal. And I also mentioned earlier that there's an audit history on every transaction. You can hit audit history and see when a transaction was paid, when it was made, and any additional transactions, any adjustments that have been made to it. Okay. So I just want to end by saying two things. I guess maybe three. But I'm going to stop share for a second. I mentioned earlier that Presty and Nagley is a partner with Intuit. So for pricing on a discount on QuickBooks Online, on Intuit payments, payroll, anything like that, if you are interested in that discount, put your name in the chat and I can reach out to you and send you that, that link. Also, because you guys are SCORE participants, we offer a discounted rate on our services for consulting. My standard rate is $225 an hour, but because you participated in SCORE and came to one of my sessions, it's $100 an hour for the first 5 hours. So if you guys are interested in that, again, please feel free to put your name in the chat or your email address in the chat, or tell Kendra and she can forward me your information. If you do put your name in the chat, your email in the chat, I will send you an email with the discount link, with the information on me and my firm. And then there's also going to be a third thing there saying for my Intuit Pro Advisor profile. If you enjoyed the class, if you enjoyed the workshop, learned anything, please feel free to leave a review. We also do give a $10 gift card to Starbucks if you do write me a review. So if you write one, just let me know and we'll send that out to you. They really do help us, with bringing in business and new leads and keeping our name in good, standing with Intuit. So that's it. Other than that, I'm going to hand that back to Kendra.
Thank you so much, Kristen. So if you still have questions following this session, we recommend you get a SCORE mentor. As I mentioned earlier, we have mentors with a wide range of backgrounds, including a good number in finance. Again, we offer free one-on-one business mentoring sessions. So since it's free, you truly have nothing to lose. Please try us out. This shows our website, and you can see here, I've highlighted Get Started, Request a Mentor. That's where you would request a mentor. It takes about 2 to 3 minutes to fill out the form. And then within 48 hours, a mentor will reach out to you at the email address you put in the form. So it's very straightforward. I also highlighted the Take a Webinar option because you're going to always find the latest list of upcoming webinars there. Speaking of upcoming webinars, We have sent you the webinar survey, which is currently in your email box. And this is your chance to give us feedback on this webinar, what was effective, what can be done to improve it. We really do value this feedback, and we make changes based on this input. And then this is also your opportunity to give us suggestions for future topics you would like to see us offer. And we do go through those, and we actively create new webinars based on your input. We are going to send you a recording of the webinar. Due to the technical problems, we will have 2 recordings for this one session, and that should be sent out to you tomorrow. And it will go to the email address that you registered for this webinar with. And with that, I'll just say thank you very much. We really appreciate your time with us today. We appreciate Kristen, and we hope you have a great rest of your day. Thanks, everyone. Bye.
Thank you. Bye.
Bye, everybody.
That's great. Bye.
Thank you. Bye, everyone.